Welcome to the Explainer. Okay, so the crypto market just took a massive nosedive. We're talking $1 billion just gone in 24 hours. So what in the world just happened? Today we're going to unpack this sudden slide, figure out what's really behind it, and take a look at what might be coming next.
Right, let's start with this number because it sent some serious shockwaves through the market. $1 billion. That is the total value of leveraged positions. We're talking bets made with borrowed money that got completely wiped out or liquidated in a single day. That is a huge, huge figure, and it really shows you just how brutal this sell-off was. And look, this wasn't just one or two smaller coins. This was a broad, market-wide tumble that hit all the big players. And it left absolutely everyone asking the same simple question: why? And maybe more importantly, why now? Before we answer that, let's just nail down how deep this drop really was.
All right, first up, let's get into the numbers. Let's really quantify the damage here.
So while Bitcoin definitely felt the sting, with a 3.6% drop, the altcoins, they got hit even harder. Ethereum fell 7%, and Dogecoin, it plunged 7.6%, making it one of the absolute worst performers of the day.
And those percentages? Well, they translate into some pretty significant price drops. You had Bitcoin slipping below that key $11,000 mark. That's a 7% drop for the week. Ethereum dipped below $4,000 to $3,887, and Dogecoin was left hovering around 23 cents. These aren't just numbers on a screen. This is real value just vanishing from the market.
So, okay, we know what happened, but that billion-dollar question is still hanging in the air. Why? Well, it turns out the answer might not be in the crypto world at all. We have to look at the bigger picture, the global economy.
Yeah, it really seems like something much bigger is at play here. This whole dip seems to be tied pretty deeply to what's happening in the broader economy, and specifically with the actions of central banks.
And it all comes down to this, the PCE price index. Now, this is the U.S. Federal Reserve's favorite way to measure inflation. Why? Because it's broader, and it actually adjusts for how we as consumers change our spending habits. And for that reason, the entire financial world, crypto traders included, watches this thing like a hawk. So this right here, this is the chain reaction that everyone is watching. When that PCE inflation data is released, the Fed looks at it and then decides what to do with interest rates. If rates go up, borrowing gets more expensive, which tends to cool down the economy. And it makes investors a lot less excited to hold what they call risk assets. Things like stocks and, yes, crypto. So all these market jitters, it's all about what people think the Fed is going to do next. Now, all this uncertainty is creating a huge split in how traders and analysts are seeing the market. It is a classic battle of fear versus optimism right now.
You've basically got two completely opposite camps forming. On one side, you have the bears. They're looking at this and seeing a market that's just running out of gas. Cooling momentum, signs of exhaustion. But on the other side, you've got the bulls, and they're arguing that the big picture, the long-term uptrend is still totally intact, and that this is all just a temporary dip.
And the case for the bears gets summed up pretty well by the analytics firm Glassnode. They're pointing to this potential mismatch between what big institutions want and what long-term holders are doing. They're basically saying that if those two groups aren't in sync, the market could keep cooling off.
Now, to add a little historical flavor to the bearish argument, check this out. The last two major crypto bull markets each lasted for about 1,060 days. Our current cycle, we're at day 1,030 and counting. We are right at that historical point where previous runs have peaked, which definitely adds some weight to that whole market exhaustion theory.
But don't count the bulls out just yet. You've got major institutional players like Citigroup who are still incredibly optimistic. They actually put out a note this week saying they believe Bitcoin could still hit $135,000 by the end of the year. So for them, this downturn is just a small bump in a very long road.
So this is where we are. We're at a crossroads. The market is getting pulled in two totally different directions. You have these powerful macroeconomic forces on one side and this deeply divided trader sentiment on the other.
So to recap, here are the three things you really need to be watching. First, that PCE inflation report. It's everything right now. Second, the Federal Reserve's decision on interest rates. That's going to follow. That's the main event. And third, just keep an eye on this sentiment battle. Who's going to win out, the cautious bears or the optimistic bulls? And that leaves us with this final, critical question, as the market is basically balanced on a knife's edge. Is this just a temporary chill, or are we seeing the very first signs of a looming crypto winter? I guess only time will tell. Thanks for watching.